welcome to the Movoto Mike, a new real estate podcast brought to you by Movoto.com. My name is Patrick Kearns. I am an ex-journalist and 10-year vet of the real estate industry who's currently working as Movoto's head of communications. Here with me, as always, is my associate, Sophie Brandeis. Sophie, how you doing today?
Doing great. Today we got Mike on the mic.
I like that. That's maybe, I'm going to assume that's the first time you ever heard that, Mike. Sophie, who have you brought on as our guest today?
So today on the Movoto Mike, we have Mike Mills. Mike is a mortgage banker and area manager at Geneva Financial. With over 15 years of experience in the mortgage industry, Mike excels in guiding clients through the mortgage process with clear communication from start to finish. Mike also hosts a Texas Real Estate and Finance podcast, offering valuable insights to real estate professionals. Whether it's securing a mortgage or sharing industry knowledge, Mike is dedicating to helping clients achieve home ownership. So with that, welcome to the mic, Mike.
Hello, lots of mics being thrown around. So I guess we're gonna mic it up today. Yes, I've heard the mic on the mic several times. I try to keep that off of my show as much as I can because I'd probably abuse it if I spoke of it too much. But it certainly happens. So I appreciate you guys having me on. This will be fun.
I love it. While Sophie and I were prepping for this episode, we got into a conversation. I'm not going to talk about ages specifically, but Sophie is a little, maybe a great deal younger than I am and didn't know what Radio Shack was. So let's talk about your previous experience before getting into the mortgage industry. You owned 2 restaurants. You were a merchandise buyer for Radio Shack. You worked for Royal Caribbean Cruise. How does that get you to the mortgage industry today?
Well, it's really just it's what do they call it? The jack of all trades, master of none type thing. Most of my life, I heard somebody say, I may have even heard it on your show when I was listening earlier today. They said I got a lot of soft skills, but not a lot of hard skills. Meaning, I am. I can talk a lot. I'm good in conversation, but when it comes to, I'm not an engineer, I'm not a mathematician, I'm not a doctor. So, you kind of land in places that you don't always expect just based on, the ability to hold a conversation. So I started like most people do these days, where I went to high school, graduated from high school, and then go to college because that's what you do, right? If you live in the United States, you go to high school and then you go to college. Well, I got to college. I was there for a couple of years, had a great time, too much fun, actually. And so it became really clear to me even at 19 or 20 years old that if I were to just stay in college where I went to Texas Tech University. Great school, lots of fun in the panhandle of Lubbock. But if I was going to stay there, I was not going to graduate. So I decided that I needed to do something a little different. So I just picked up with a couple of friends of mine. We actually moved and drove to Florida, lived in Fort Lauderdale for a year. The intent was to get the job on the cruise ship. I had, I don't know if you remember the movie The Truman Show. Did you guys ever see that with Jim Carrey?
I do.
I've seen that movie.
It's great, yeah.
So I had one of those moments watching that where at the end of the movie, he just figures out that he's kind of in this weird game, this weird TV show that he doesn't really understand, but he knows he just doesn't want to do it anymore. So, he kind of pulls his boat up, hits the wall, walks up the stairs, opens the door, walks out and says, "See you later." And that's kind of the end of the movie. So, it was like this reset. So I was like, all right, this isn't what I want to do. So I need to go figure out who I am and what I want to do. So, like I said, moved to Fort Lauderdale, lived there for about a year, sleeping in hotels, people's couches. I was a bartender at Outback Steakhouse. Worked there for a number of years. And so finally got a job working on the cruise ship, which is a unique experience. I kind of got to travel the world to some extent. But in traveling, really the biggest impact that it had on me was I met people from all over the world. Because when you work on a ship, at the time, I think we had somewhere in the neighborhood of 1,000 to 1,500 crew members or staff members on board the ship. And of that total, there might have been 15 Americans. And that's about it. Even, Canadians, there was maybe about 15 or 20 of those. Australia, there was a handful. But most people were from South America. They were from Eastern Europe. They were from the Caribbean, the Philippines, kind of all over the world. So you got to meet people from all walks of life. And I actually had a guy that I became friends with that was from Colombia that we were buddies. I was a bartender when I was on the ship, which is a unique job for an American to have on the ship. But we were having a drink one night and he said, if I come back, because you run contracts, so you're on for 3 or 6 months. And he told me, he's like, if I come back on my next contract and I see you on the ship, he's like, I'm gonna beat you up. I was like, wait a minute, what do you mean?
Wow, big threats. Yeah.
We were buddies. I was like, what are you talking about? He's like, well, you're here on vacation. He's like, you're here because you thought this would be fun and a good adventure. And he's like, and I'm not hating on you for that. And that's fine. Have your vacation. He's like, but you were born in a country where you have so many opportunities given to you for just the simple fact that you were conceived in the United States. And he's like, these are opportunities that I've never had, that I could never give my kids. And you here, this is the best job that I can get from where I'm from. And you being here is kind of an insult to me because, you have so many more opportunities that you could take advantage of and you're choosing not to. And that conversation really kind of was like, okay, all right, I really need to do more with myself. You get a different, perspective on life when you meet people from other places and you're not in your bubble.
Yeah, it's like, it's not a wake up call, right? But it's like a powerful perspective
Yes.
to hear somebody come in and say that and just sort of provide that for you.
Yeah, there's a lot of good, scientific data that would suggest that between the ages of about 15 or 16 to about 25 or 26, you kind of become the person that you will be for the rest of your life in that period of time because your brain's still developing and you develop all these, that's why we all listen to the same music when when you're 45, like I am. I'm still listening to this stuff when I was 22. You dress kind of the same. You're wearing flip-flops and shorts around t-shirts because that's how we dressed, in the 90s back in the late 20th century. But anyway, so, I did that. I finished up there. I came back. I'm from North Texas. I live in Dallas, Fort Worth. I came back home. I didn't go home to my family, but I came back to where I was, where I grew up. I graduated from the University of Texas at Arlington, which is just like an offshoot of UT in Arlington. Met my wife there. And then I decided, okay, I'm going to be the good, follow the path. I got my degree. So now I'm going to go join a career. I'm going to go work for, put my, resume on monster.com and I'm going to go be a part of the working community. And
I love it. Join a career.
Yes. And I got a job working for Radio Shack, and Radio Shack, for obviously everybody knows what that is, but they're like little retail shops that, used to do electronics. They still exist, but they're kind of fallen by the wayside, but they little transistors, people that would make things, use them a lot. They sold, when I was there, it was kind of the beginning of the cell phone market kind of really emerging. So I got a job as a merchandise buyer setting, the store offerings for things like headphones and the accessories to the cell phones. Because back then it wasn't just, Samsung and Apple. You had, a wide breadth of different types of phones. So you have all these different accessories. So I'd come from working on a cruise ship. I was bartending. I'd actually had a job running a restaurant for a short period of time, and ran a swim school for kids for about 3 years. In all of these careers, I was making anywhere on an average basis. I was making anywhere between $40,000 to $60,000 between the ages of 19 and 22. Right. I go take my job working at Radio Shack as a merchandise buyer, and my starting salary was $28,000. So this is after, got my college degree. I'm starting in the big corporate world. Here we go. Right. So
yeah, I think my first journalism job was I took a pay cut from the grocery store that I was working at to get into journalism. So similar sort of thing.
Yes. Yeah, it's quite the shock. But you think, because you're young, you don't know any better. It's like, well, I'm going to work my way up, and et cetera. And then you get into that realm, right? And you realize the amount of politics that take place in there as far as who you know and who you're working for and who likes you and who doesn't like you. And it doesn't really matter, at least the environment that I was in, it didn't really matter how well you did your work. It really mattered as to who you went to lunch with and who you had happy hour with afterwards. And I can play those games, but some of those people weren't necessarily on the top of my list of people to spend a lot of amount of time with. And I remember I was there for about a year, and I walked into, this was, you guys won't remember this, but there was a period of time where they were on the verge of bankruptcy because there was a lot of adjustments to some of the numbers that they had projected out. The stock had fallen pretty heavily. So they had a lot of layoffs. They had laid off several thousand people in a short amount of time. And we had come from a meeting 2 days before where they had laid off like half the people in the auditorium, they were like, hey, come in the auditorium. If you're here, you didn't get laid off. Congratulations. You're like, what is this? So I remember we go into a big meeting, and there was probably about 50 people in the room. And I walked in the door and everybody there, it was quiet. Everybody was looking down at their, feet, not looking, talking. Cell phones we weren't all on our iPhones. Somebody was doing that, but everybody nobody was saying anything and nobody was looking at anybody because everybody had just gotten laid off and they were scared. You don't want to raise your head because it might get chopped off. And I kind of known because they have these scales of how much income you can make at different spots and whatever. And I kind of looked around the room and I was like, I know how much that guy makes roughly. And I know how much that guy makes. And they had been there for 10, 15 years. And I said, they had just built a new home office and we were on about the 20th floor. And I was like, if I'm 40 years old and I'm sitting in a room after 15 years working for a company like this, and this is how I feel and knowing how much money that I put in, I'm like, there's no way. I'm never, ever, ever going to do that. I would have jumped out that window. I was like, I'm not living that world. So that's when I basically make the decision is like, okay, whatever I'm going to do it on my own. I'm not going to rely on somebody else to create a path for me. I've got to do it myself. And I remember that very vividly because that was kind of the decision that I had made to like, okay, whatever my path is, I got to find my path.
And real estate is such a powerful industry because you can really create
That's
your
right.
own way.
It was one of those things where you realize that if you're going to rely on someone else to pay your bills and someone else's opinion of you to set your income and your future, then it's a very tough thing to do. Listen, plenty of people do it. There's a lot of success stories. I'm not saying that you can't do it that way. I'm just saying it's not, it wasn't for me. And so I got into the restaurant business, which, if anybody been into that, those things never work out for, usually don't. I was 24 years old starting in that thing, didn't really know what I was doing. I had a business partner. We did it for about 7 years, made it quite a good ways. We opened 2 restaurants. I joke with my wife, which she doesn't find funny, that I got my MBA from the restaurant, not from SMU, but it cost me about the same. And she doesn't like that joke. So, But after that, it kind of fallen apart. I was trying to find a place to go. I was like, okay, what am I going to do now? Because again, I swim school, Radio Shack, cruise ship, restaurant. Like, where's the common thread there? There is zero. Like, there wasn't a path.
Yeah, jack of all trades is like an understatement at this point, right?
Yes. So I had a friend of mine, good buddy of mine, that this was in 2010, right after the great financial crisis, and everything was kind of, it had already crashed and it was kind of on its way back up, but interest rates were really low. They were, in the 3 to 4% range at that point too. I remember even my very first loan, I locked at 2.875, and it was in August of 2011. So, or August 2010. So it was one of those things where I'd reached out to him. He was like, hey, I'm doing this mortgage thing. And I was like, well, what does that involve? He's like, this was a call center setup. I don't know if you guys know the difference, but there's retail and then there are call centers where people just, it's like Quicken is a call center, or Rocket Mortgage is what they call themselves now. So it was kind of an environment like that. So people were calling in and so you just spent all day on the phone and I was talking to, 20 to 30 people a day, talking about mortgages. It was very much a trial by fire. I won't name the company that I was at, but let's just say they didn't give a lot of training. It was just like, here you go. Take the calls. Here's a lot of it was kind of, you fill out stuff and you'd have somebody you could ask questions to get things figured out. But it was a good way to learn because, you make a lot of mistakes, you screw up quite a bit. But at the end of the day, because at that time it was mostly refinances, it wasn't a situation where I would make a mistake and cause someone's ability to lose their house. So worst case scenario, I didn't read their income right and they couldn't get the refinance done. And that was kind of it,
Yeah, I think that was a through line that I've heard from a lot of folks is that like a lot of careers were sort of launched out of that 2008 to 2011 period. I think, famously Ryan Serhant said like his first day in real estate in New York City was the day Lehman Brothers closed, right? So like that opportunity and maybe parallels to a lot of fear that people are seeing now in the market, but like there's always opportunity. There's always chances to grow sort of no matter what the macro environment looks like.
Yeah. And at that time too, there was because we had come out of this environment where people that were doing my job had made so much money in such a kind of, I don't want to say a slimy way, because there were definitely good people, but there was a lot of incentive built up by the banking industry to give out these loans without doing a whole lot of due diligence. And, I did a episode or a segment on my podcast recently about ARMs, and I've gotten a lot of feedback about, ARMs are terrible. I'm like, ARMs aren't terrible. What's terrible is not validating income and assets and then selling someone on an ARM and not educating them on how it works. That's terrible. But if you understand how they work and you understand the mechanisms and what you need to pay attention to and whatnot, then it's not a bad product, especially in an environment like now where rates are declining. So you had a situation where a lot of people made a lot of money and got out of the industry. And then a lot of new people came into the industry because those guys that made all the money, they went to go make money somewhere else because they weren't making the same amount, because we had been highly regulated at that point, caps on commissions, everything was very upfront and very straightforward. And it was harder to do loans. You had to kind of know what you were doing because the regulations had kicked in so much. So from that.
Now, I don't think the portrayal of loan officers in The Big Short not being very flattering, like that is more than anything that sticks out in my head. The like sleazy guys in Florida, that like not a flattering portrayal. But I think that, obviously things aren't like that now, and things have changed quite a bit.
Yeah, well, and I'll tell you, when I got into the business, one of the things that I always do, and I recommend this to anybody getting into any industry, but especially real estate or mortgages, is find people in the industry that that are high performers, the ones that do the best, and then take time to go to lunch with them or have a phone conversation or do something, find a way that it's valuable for them as well. But go meet with them and find out what they do. It doesn't mean you have to do things the way that they do things. It just means that I believe very strongly that every person that you come in contact with, you can learn a little bit of something from, right? Sometimes they're good things, sometimes it's bad things. But I'll tell you, when I first got to the company I was with, that was one of the things I did. Is I went and sat down and I found out who the top 5 guys folks in the company were, and I sat down with each one of them and I said, okay, what do you do? How do you do it? How's the process work?
What I find really interesting about you is how you have had this huge, robust career and you've met so many people along the way, yet you work in an industry where you help people stay in one place. So I just wanted to ask you just to talk about your industry and what your experiences have been like helping people lock in mortgages and working with your clientele.
Well, the biggest problem that I feel like we have today is that we have a lack of financial education. It's not taught very well in schools. From my generation, it wasn't passed down from parents to kids in many cases. In my household, we did not talk about money. I had no idea what my parents made growing up. I had no idea how much money we had in the bank. I had no idea what the costs were. I had no clue. You have to figure all that stuff out on your own. And as a young person starting off, that's a very, very deep disadvantage that you have if you have no knowledge of how interest works, how, mortgages and stuff work. And so what I found was my skill is I had an ability to take complicated information and break it down into simple pieces to make it not sound so challenging and difficult. And so the real joy that I get is 2 things. Is one, helping buyers understand what it takes to purchase a home and take away some of the fear. Because when you get down to the core principles of what you're doing, it's not that complicated. It's actually pretty simple. There's just a couple of pieces that you have to understand. And once you understand that, then you have a pretty good idea. But our industry, just like attorneys and everything, we do a great job of making everything sound really complicated, really challenging. It's like,
right. So for people listening to this podcast, what are those pieces that are hard to understand?
Well, so anytime I talk to borrowers the first time, I always make sure that they understand 3 things: what type of loans are available to them and why, not just that they're there, but why this is good for you. Secondly is how a payment is put together. So what are the components of a mortgage payment? What can you affect and what can you not, right? It's like people want to buy a $400,000 house, but they want their payment $2,500. Well, I'm going to tell you why that's not possible. Okay. And I'm going to walk you through how the math works so you understand that that's not something that's going to be feasible unless you have a significant amount of cash, right? So now, granted, it depends on the different parts of the country. I'm in Texas. We have high property taxes. So, that's a big component of it. And then also within that, understand how rates impact it, because everybody wants to talk about interest rates. Well, interest rates are really important when it comes to your payment, which is what you ultimately care about. But an 1/8 of a point or a 1/4 of a point on an interest rate on, say, like a $300,000 loan is only going to change your payment like $35 a month, right? So there isn't a significant impact on that type of payment. If you're waiting, oh, I should wait until market comes down or the rates change. Okay, well, maybe not, because maybe you need to find the house that's best suited for you and you can adjust that stuff later. And then the last thing is how much money they need for the transaction. So you have down payments and you have closing costs. And one of the big, I would say issues within our industry is that a lot of mortgage professionals present this idea that there's all these special programs out there that if you just ask the right questions and if you fit into the right category, you're going to get this steal of a deal loan. And the reality is, and what I tell people all the time is like, do you really think that banks give away money for free? And generally speaking, they say no. And there's
some secret cheat code.
Yeah, there's always a trade-off with everything. It doesn't mean that they don't exist. It just means there's a trade-off. So if I'm in a situation where I have no cash, because these are the big ones, you don't need I'm going to give you a credit, or you're going to bring less money out of pocket, or whatever the case may be, zero down, first time home buyer loan, all these things. Well, the trade-off is typically that they're going to pay a higher interest rate. Okay. Your rate is going to be higher to offset the cost that the bank is going to eat in your favor. Right. And so because of that, as long as people understand that, I tell them, hey, look, if you understand what you're doing, if you know that you're going to elect to take a higher rate and there might be some penalties for refinancing early or whatever the case may be, in order to save your cash, because that's in your situation, that's going to do you the best, then great, let's do that. Right. But I'm not going to present it as this magical, tool that's going to make everything, be okay. And by the way, there are some programs out there that are very much designed for parts of the estate or, where you live and different things of that nature that can be beneficial. But the boxes for those are so small that a very few people actually fit into that box. And most of those are just used to make the phone ring to have somebody call. So the big thing is you just have to have someone that's going to walk you through everything involved in the process, so that my job is to make sure that as an adult, you understand what you're doing so you can make adult decisions.
Yeah, that makes sense. I think a thread I want to continue to pull on is that education thing, because I feel like so much of it is at the top of the funnel, right? Once you're working with a client, it's really easy to walk them through things and present them all their options. But I feel like that sort of fear or not understanding the housing market does hold back a lot of people from taking that first step and reaching out to a loan officer or filling out a lead form on a website like Movoto.com or reaching out to a real estate agent, right? So how do you meet folks and sort of like increase your business at the top of the funnel without, you haven't met these people, right? You can't explain to them the different types of mortgages. Talk to me a little bit about driving business at the top of the funnel that way with education.
So right here, this is what it is. That's why I started my podcast. Basically, was I knew social media was an important channel or an important avenue that I needed to be on in order to promote my business and promote my company, my area. So it was something I needed to do, and I didn't want to do dance videos or promote myself as call me for your rate and turn, whatever. So what I chose to do was take what I could do, which was talk and explain things and have conversations with people. And podcasting was something that I personally enjoyed. I listen to podcasts all the time. It's something that I do myself. And so it was a way for me to have conversations, meet interesting people, and talk about mortgages and real estate and things that people are unfamiliar with. Now, mine's geared a little bit more towards the real estate professionals themselves, but I do plenty of topics related to how interest rates work, what type of programs are available, all that kind of stuff to supplement that as well. And then take those little pieces and clip them up and put them on social media. And so that's kind of my way to somewhat legitimize myself, because again, we get referrals from realtors, and that's generally how we get our business, at least these days. That may be changing sometime soon, but that's how it happens right now. And so if someone can then go verify me through a third party, being Facebook, Twitter, LinkedIn, YouTube, and see that I'm a real person, I have some thoughts on how all this stuff works, then they feel a little bit more comfortable to have those conversations and pick up. And more so, I always tell realtors that I work with, I'm like, you have to be out there a little bit, because you might get the referral. Your best friend might refer their daughter to you, but that daughter is then going to go look you up on social media or on Google or whatever. And if they can't find you, then they might call somebody else because they really don't know who you are. So that's kind of the avenue that I chose to go down to try to get my message out.
I think it's really interesting how in today's day and age, creating content is its own career and its own profession. And the way that you've combined this with your job helping people obtain mortgages, I just think that's really cool.
Yeah, I mean, it was just a way. Like I said, I'm a social media browser. I don't necessarily engage. I mean, I do more now because I understand how the mechanism works and how algorithms play a role in liking and commenting and all that stuff. So I get that, but it's very it's forced. It's not just something that I spend a ton of time doing, as a 45-year-old man. So it's just not my normal thing. But I know it's important. I know the role that it plays, and it's also just for the development of business. For me, it's a reason for me to talk to realtors. It's a reason for me to have conversations because I can show. I mean, I've done almost 150 episodes of my podcast over 2 years now. And so I've been consistent with it. I've done it every single week. I have different versions. I know how to put them out. I know how to edit them. I know how to, use AI tools in order to help kind of shortcut a lot of these things. So it's something that I've gotten really good at. So it's another skill that I've developed over the last several years that now I can take and transfer to my referral partners to help them grow their business.
Yeah, whether it's like cold calling, mining your database, those sorts of things, like it's the same skill of discipline, consistency, right? You're doing it every single week. You're doing it on a repeatable schedule. Is that sort of what you think, sort of talking about the environment that we're in right now, right? Especially from a mortgage and real estate perspective, we are at historically low transaction numbers. Refi business is probably pretty small with real estate, with what way rates are right now. That's changing a little bit. So you're in a low transaction environment generally, right? More people fighting for fewer transactions. Is that the advice you have on just growing your business in an environment like this, right? That consistency, sort of like leaning into personal branding, content creation, things like that. Or there anything else you want to make sure you highlight?
Well, this is the old man in me a little bit coming out. But what I would say the difference between now and maybe 2 or 3 years ago is now you just have to work. Whatever you define work as, and there's a lot of ways to quote skin the cat. There's no one way that does it. But we came out of an environment where we went from literally the highest level of transactions that we've seen in our industry ever in the history of real estate for a good 2 to 3 year period of time, right? Into, like you said, the lowest level of transactions that we've seen in almost 30 years. And so, this has been a huge shift. And there's been a ton of people that came into the real estate industry during the 2021, 2022, 2020 range that, you didn't have to do anything. You would just tell people you sold real estate, or you would tell people you did mortgages, and your phone would ring. Because when interest rates are 2 and 3%, everybody wants a mortgage, right? And so that wasn't a challenge. Whereas now that has all gone away, and we've lost a lot of people in the industry. There's been a tremendous amount of runoff as far as people that have left, and I think it's going to continue because I don't think we're out of the woods, at least as far as the rest of this year is concerned. We're going to get a little bit of bump probably with these refinances because rates are improving, but like we talked about before we started this, not for good reasons, for reasons that the economy, at least right now, doesn't look like it's doing too hot. So all these things lead to there will be a bump of refinances, but I don't see the purchase market taking a big lump or big jump anytime soon because people will be concerned about jobs. So you just have to work. You have to get up. You have to go, put your shoes on, get dressed, and go do whatever it is that is, whether you're knocking on doors or dialing your database or creating content or whatever it is. You just have to work.
Right. So that's the perspective of someone working in the industry. Can you maybe break down some misconceptions that consumers have while we're in this sort of complicated and tough time in real estate?
Well, the people that I feel the sorriest for right now are realtors. And the reason being is that, there's been this environment created where realtors are looked at as the bad guy, right? And as many of us know, the average realtor in this country makes anywhere between $50,000 to $60,000 a year. Okay, we're not talking about now. We see the stuff online. We see the videos of people flexing and whatever it is that are showing what they've made in their cars and all that. But some of this is not reality because this is just stuff that they do to promote themselves on social media channels. But also it's the very small minority of folks that are doing this type having this type of success. Most of these, including my wife's a realtor. She's a mom. We've got 2 kids that are they're both in high school right now. And she spends most of her time shuffling them back and forth between all their activities. She volunteers for the PTA. She, spends time helping people find leases, sometimes find homes, but she's not making $500,000 a year as a realtor. She is just doing it as something to give her freedom and flexibility to go out. So there was this world that's created right now with all these lawsuits that are telling the general consumer that realtors have been fleecing you for all these years and taking your money, and you should be angry at them. And the reality is that, this system that we had in place for a long time was very effective for 100 years. It was a pay it forward system, which many people believe in these days, right? Pay it forward to the next level. So if you bought your house, when I bought my house as a young person at 22 years old, when I bought my first home, the seller paid all my closing costs. Now, markets vary on some of this stuff, but seller paid all my closing costs. I had to come up with my down payment. I think my interest rate was like 6.5%, right? My home was only $130,000, which is a big difference than today. But then when I went to sell my home or sell that home, I did the same thing, because the idea is we want young people to be able to get to a place where they can afford, the quote American dream, which is to have a place where you can be stable and you can live and raise a family and build a community. And that is my bigger fear, that because we villainized realtors, that the advocate for the buyer that was there supporting them is now going to slowly be eroded, because people are going to start moving out of that role. Those listing agents will still be there. And maybe it doesn't go down the road that I think it does, but, we already see buyer agent commissions coming down, which, look, we can argue what level they should have been at and how it was going to be set up. I think there is definitely room for argument there, but to just say all together that, sellers, they're not saying sellers can't pay buyer agent commissions. They still can, but they are strongly, pushing against it. And so I think that's going to erode that buyer agent, which that's my biggest concern. And I wish consumers understood and saw that side of the job, where, they're taking people all over the city and having these conversations and help people understand and hold their hand through the process. And I think we're at risk of losing that, which is my main concern.
Yeah. I think what's so interesting too is discount brokerages and discount broker services have existed for a long time, right? They just have never been widely adopted, because you're making the biggest purchase you've ever made in your life. You want somebody that is the best that's going to handle that, right? So we saw Purplebricks launch in the US and close a few years later because it just couldn't get any traction. Redfin has rolled back a lot of its 1% fee discount services in a lot of markets. So it's interesting, but I think that sort of pulls me to a thread I want to talk about, which is, right, choosing the right realtor or mortgage lender. That's a tough thing for a lot of consumers. What factors should people consider when they're choosing a mortgage lender? Obviously, if they're in North Texas, call Mike Mills. But somebody outside of that area, right, is deciding who to work with, qualities to look for, different types of things, different red flags. What should people look for when they're considering a mortgage lender?
Well, I always recommend, first off, realtor or lender, either way, is ask for a referral. Ask somebody that that has recently bought a home, or if you know a realtor, or if you know a lender, ask them, hey, who would you use? Because anytime someone's been in the industry and has worked with multiple people, they generally are going to give, because, by the way, just in case anybody doesn't know, I cannot pay a realtor to get business from them, nor can they pay me. It is against the rule. We will lose our license if it ever gets found out. There is no compensation that moves either way. So if someone is referring me, they're referring me because I can close the loan and make sure it gets done on time and communicate the process so everybody's happy. So talk to somebody that you know in the business and ask them who they should use or who they should go through, right? That's number one. Number two is, once you get that, then go verify, what did you say earlier? It's is confirm or verify. I can't remember the phrase you used on it, but go check and make sure that person is out there somewhere that you can find, right? That it isn't just somebody working in their basement and crazy person that's never leaves their garage. So make sure you know who they are. Make sure, someone's referred them to you. Make sure you can find them online and have some check reviews, see if they have, any social media channels that you can check with. And then, I'm a big believer in when you talk to somebody, if you get a bad vibe, then you you listen to your gut. If it doesn't feel right, if you're confused, if you hang up the phone with a realtor or a lender and you walk away from that conversation feeling more confused than when you went into it, it's probably not the right person. Because you said something earlier, people, when you're buying a house, this is the biggest transaction of your life, but it also is a transaction that they only do 3 or 4 times. Most people only do 3 or 4 times in their life, right? So you'll go 4 or 5 or 6 years before you do it. And if you're a journalist or if you're, a marketing person, you're not paying attention to what's happening in real estate market. It's not something that you're watching every day. So you don't learn about this stuff, right? I don't know what the plumber's doing. I don't know what the electrician's doing. It's not what I do. So you have to make sure that that person makes you feel comfortable and doesn't make you feel stupid for not knowing something that you don't do on a regular basis. And if they're using words that don't make any sense to you or acronyms that are just like, what is it? You don't even know what it means. And people don't want to ask, right? If someone says, well, you're DTI, they're like, I don't know what DTI means. What is that? They're not going to ask that question, right? So you got to make sure that that person, after you hang up the phone with them, that you feel confident that they're going to take good care of you. Because I'll tell you personally, I get a lot of business that way. I'll have a realtor that said, hey, my borrower talked to so-and-so and they feel like they're comfortable with going to them, but I told them they had to talk to you first. I'm like, fine. So I'll chat with them, and just say, hey, look, tell me your situation, what's going on. And usually within the first 5 minutes, I've got a pretty good idea that they didn't. I'll just say, well, what did they tell you your credit score was? And they're like, I have no idea. Well, what type of loan? Are you doing FHA or conventional? And they're like, I don't know. They didn't, or they said it, but I don't remember. I'm like, okay, well then here we go. Let's start over from the beginning and I'll walk you through everything. And by the time I get through that, then they're like, okay, I feel so much better that I talked to you. So let's move forward. So I think that's the most important thing is you have to feel comfortable with the person that you're dealing with and feel like they're there to take care of you.
Right. Clear communication. It's full circle from the intro. So at the Mavoto Mic, we like to end things with a little rapid fire game, just 3 questions. We call it, let's keep it real.
Okay.
All right. What is your favorite podcast other than your own and this one?
Joe Rogan Experience.
What do you think the biggest mortgage myth is?
That there are 500 programs out there and you just have to ask the right question to get the right one. There's 5. There's 5 types of loans. That's it. Everything falls into that.
And last, if you can interview anyone on your podcast, who would it be?
Oh, man. I would interview, dang it. I got to do quick on this one, huh? I'm going to say Lex Friedman. I don't know if you know who that is, but he's a computer scientist, AI guy, but has talked to people all over the world and just is a really good human being. So I'd really love to have a conversation with him.
All right, Lex Friedman, you heard it here on the Mavoto Mic. Mike Mills wants to interview you.
That's right.
All right. Well, thank you so much for coming on. We appreciate it.
Thanks for having me, guys. This was a blast. I really appreciate it. You guys are doing great work. And by the way, big fan of Mavoto. I think you guys are, the offset to the other big boys that we don't want to mention because y'all have a great company and you're doing things the right way and trying to connect people in a way that isn't trying to push out the little guys. You guys are trying to bring the little guys forward. And I think with Chris and, Nikki running the show out there, I think y'all have big things on the horizon. So I'm very excited. I'm thrilled to be a part of it.
We appreciate that, Mike. Thanks, man.